Have you ever wondered how to earn money while you sleep? Welcome to the world of passive income, a financial strategy that generates a steady stream of income, requiring little to no effort to maintain. From bank deposits, investing in bonds and stocks, to real estate investments or peer-to-peer lending, there are numerous ways to create a reliable source of income that works for you. It's time to make your money work smarter, not harder. Let's dive into the different methods you can use to generate passive income. One of the most conservative ways to earn passive income is through bank deposits. It's like planting a seed and watching it grow over time. Only in this case, the seed is your money, and the growth is the interest you earn on it. Now, how does it work? When you deposit your money in a bank, the bank uses it to fund its lending activities. In return, the bank pays you interest on your deposit. It's a win-win situation. The bank gets the funds it needs to operate, and you get a steady stream of income without lifting a finger. The interest rate you earn on your deposit is determined by the prevailing market rates and the policies of the bank. As of today, the average interest rate on bank deposits is around 2%. While this may not seem like much, remember, it's money you're earning without having to do any work. And over time, thanks to the magic of compound interest, your deposit can grow significantly. There are several benefits to earning passive income through bank deposits. First, it's a low-risk investment. Your deposit is insured by the government, so even if the bank fails, you won't lose your money. Second, it's a hands-off investment. Once you've made your deposit, you don't have to do anything else. The bank does all the work and you simply collect your interest. But like all investments, bank deposits have their drawbacks. The main one is that the interest rates are relatively low compared to other investment options. So while bank deposits are a safe way to earn passive income, they may not provide the high returns you're looking for. In conclusion, bank deposits are a safe and easy way to start earning passive income. They're ideal for those who are new to investing or those who prefer a low-risk investment strategy. So if you have some money sitting idle, why not put it to work by making a bank deposit? Your future self will thank you. Investing in bonds and stocks can be another lucrative way to earn passive income. Let's dive into each of these and see how they work. Bonds are essentially loans, but instead of you borrowing money, you're the one lending it. When you purchase a bond, you're lending money to an entity, usually a government or a corporation. In return, they promise to pay you back the full amount at a certain date, along with regular interest payments until then. This is an attractive option for those who prefer a steady stream of income and a lower risk profile. On the other hand, stocks represent ownership in a company. When you buy a stock, you're buying a piece of that company and essentially betting on its success. If the company does well, the value of your stock increases and you can sell it for a profit. Additionally, some companies distribute a portion of their earnings to stockholders in the form of dividends, providing another source of passive income. However, investing in stocks comes with a higher risk compared to bonds. The value of a stock can fluctuate significantly, and there is a potential for losing your investment if the company performs poorly. So how much can you potentially earn from investing in bonds and stocks? Well, the return on investment greatly depends on the specific bond or stock you invest in and the overall market conditions. Historically, the average annual return for the S&P 500, a popular stock market index, is around 7 to 10% after adjusting for inflation. Meanwhile, bonds typically yield lower returns but offer more stability. It's important to note that investing in bonds and stocks requires some knowledge of the market. You need to understand the fundamentals of the companies you're investing in and keep an eye on economic indicators that could impact your investments. Investing in bonds and stocks requires some knowledge of the market, but it can be a profitable method of earning passive income. Real estate is a classic and reliable way to generate passive income. This traditional method remains appealing due to its potential for steady returns and the tangible nature of the asset, which many find reassuring. Investing in real estate involves purchasing properties, whether residential or commercial, and then renting them out to tenants. The monthly rent collected serves as a regular income stream, essentially making the property an income-generating asset. The potential returns from real estate investment can be substantial. Rental income can provide a steady cash flow that often matches or even surpasses the average salary. Plus, As property values generally appreciate over time, the initial investment can grow significantly, offering a potential windfall should the property be sold in the future. However, real estate isn't a surefire ticket to wealth. It comes with its own set of challenges and risks. For instance, properties can sit vacant for months, yielding no income, but still incurring costs like maintenance and property taxes. Also, property values can fluctuate, potentially leading to losses if a property's value declines. Moreover, being a landlord isn't for everyone. It involves responsibilities like property maintenance, dealing with tenants, and understanding and complying with housing laws. For those who prefer a more hands-off approach, real estate investment trusts, or REITs, offer a way to invest in real estate without the need to buy or manage properties. REITs are companies that own, operate, or finance income-generating real estate. Investors can buy shares in a REIT, effectively owning a small piece of its real estate portfolio. This allows investors to earn a share of the income produced through real estate investment without having to go out and buy a property. Whether you opt to buy properties or invest in REITs, real estate investment requires careful consideration, planning, and management. But with the right approach, it can become a lucrative source of passive income, helping you build wealth over time. Real estate investment can be a great source of regular income if managed properly. Peer-to-peer lending is a newer method of earning passive income that's gaining popularity. But what exactly is it? Simply put, it's a practice where individuals lend money to other individuals without the use of a traditional financial intermediary, like a bank. This is often facilitated through an online platform that matches lenders with borrowers. The appeal of peer-to-peer lending lies in its potential for higher returns. Because you're bypassing traditional banking institutions, which have overhead costs and profit margins to consider, the interest rates can be more favorable. Lenders can earn a significant return on their investment, which can be much higher than what you would earn from a savings account or even some bonds. However, as with any investment opportunity, there are risks involved. The main one is the risk of default. If a borrower fails to repay their loan, the lender could potentially lose their entire investment. Some platforms mitigate this risk by spreading your investment across multiple loans, thereby diversifying your risk. Others provide provision funds to cover potential defaults, but remember, nothing is guaranteed. In addition, peer-to-peer lending is still a relatively new industry, and it's not as heavily regulated as traditional banking. This could potentially lead to more uncertainty and volatility. It's also worth noting that your investment is not covered by any financial protection schemes like bank deposits are. So, is peer-to-peer lending right for you? That depends on your financial goals and risk tolerance. If you're looking for a way to potentially earn a higher return on your money and you're comfortable with a little bit of risk, it could be worth considering. But as always, it's important to do your own research and understand what you're getting into before you invest. Peer-to-peer lending can be a profitable method of earning passive income, especially for those willing to take on a bit more risk. But like all investments, it's not without its risks, so tread carefully. As we've seen, there are many ways to generate passive income. Each method comes with its own unique benefits and challenges, making it important to consider all aspects before deciding on the best fit. Bank deposits are a conservative yet rewarding choice, providing a stable income with the added security of deposit insurance. However, the returns might not be as high as other options. Investing in bonds and stocks has the potential for higher returns, especially with dividend-yielding shares. But remember, the stock market is unpredictable and requires a good understanding of market trends. Real estate investment, on the other hand, offers a tangible asset that can provide a steady income stream through rentals, yet it requires a significant initial investment and ongoing management. Peer-to-peer lending is another interesting option that allows you to act as a bank, lending your money to others for interest. While it can offer attractive returns, it also carries a higher risk, as the chance of default is always present. In conclusion, there's no one-size-fits-all strategy for generating passive income. It's about finding the right balance between risk and reward that suits your financial goals and risk tolerance. Remember, the key to successful passive income is diversification and careful management. Good luck with your passive income journey.